All right, do some stretches, get an energy drink in you. Let's keep powering through this. Let's see what we got here. We've got procedures for obtaining evidence about subsequent events. So what are you going to do to get this evidence for subsequent events? Well, if we want to investigate changes in long-term debt, start with that account. Classification between short-term and long-term debt is important. Very important there. Make sure the financial statements are accurate. And changes in debt structure after the balance sheet date could affect the debt classifications for the period under audit. All right, so that's what you're going to look into there. You're going to investigate those changes in long-term debt, make sure that long-term debt and short-term debt is properly classified. Inquiring of legal counsel on litigation claims and assessments arising after year end. You're going to contact the client's legal counsel. Contingencies and commitments must be disclosed and accrued for. We want to inquire of management for significant changes in stockholders' equity occurring after year end. So any significant dilution of shareholders, that's important for the shareholders to know. If they're being significantly diluted, well, I wouldn't want to be diluted as a shareholder, but hey, that's how some companies work. It's all fine. But we got to know if that is happening so we can disclose for it. Changes in capital structure, right? Did we just issue a bunch more stock? Significant ownership changes. Did we have some massive private equity firm come in and just buy up 30% of the company? That could all be important for shareholders to know. We want to compare the most recent interim financial statements. So this would be maybe interim financials. Remember, that could be like January 1st to June 30th, so just a half-year financial statements. We want to compare the most recent interim financial statements after the period under audit to those being audited for any significant changes. Meaning, let's say we have, we're auditing our 1/1 to 12/31 financials, and this is all year one. And then let's say the client prepares their financial statements for the next year, 1/1 to, let's say, 6/30. So that's half the year. We want to take a look at these 6/30s, or maybe it's just for the quarter. Right? I mentioned before, we want to take into account whatever's most recent and see if there are any significant changes, because that could affect many things, right? I mean, why did our debt completely balloon, right? Why do our financial statements look very different? Well, that could result in identifying a significant subsequent event. By reviewing preliminary or interim statements from the month or two after the period under audit, the auditor may see significant account balance changes, which could indicate material subsequent events. Just a note on interim financials. So this will come up in the section, but why not touch it again? It's an important point to know. Keep in mind, for the purposes of the test, now in reality, in my experience in reality, this was in bigger accounting firms, you're always going to do a full year audit. Now you do interim testing to essentially, in theory, alleviate the amount of work you got to do. Because if you've audited January 1st to 6/30, then all you got to do, in theory, is then audit 7/1, so July 1st to 12/31 at the end of the year. So it's kind of like you're doing a little bit of the work before the year end. However, in practice, they say you're doing interim. It's supposed to alleviate year-end audit, but you're still working 80 hours a week. Hey, that's life in the big city, right? So, but for the purposes of the test, simply interim audits can be quite all right. We'll talk about that in the interim section as well. So you could have an audit that's just 1/1 to 6/30, and that could be sufficient because you've done enough testing. Now, again, we'll talk about that. It's just something I want to bring up because that is something that confuses a lot of people. They say, well, hey, Nick, in reality, it doesn't matter if you do interim testing. You still have to test the entire year. In certain circumstances, if you've done enough testing for this period, then you don't actually need to test the rest. Something will come up in that section, if you've seen it already or if you haven't, depending on how if you're taking my course out of order, shame on you, but some people do it. I jump around too. I don't mind. But just some important points to keep in mind. Some more procedures for obtaining evidence. We could want to inquire on any usual account adjustments after year end and post balance transactions. So yeah. If it's even if it's usual or unusual, why did these adjustments happen after year end? Why? Was it legitimate? Was it an error? Are you trying to conceal some fraud? What's going on there? These could indicate management attempting to hide subsequent events, or management simply accounting for these events, which may need to be disclosed, something you look at there. Just if you close the books, why are you reopening them and doing something after the period? Also, inquiring of management on estimates made and used in the financial statements. We'll see this quite a bit, right? Estimates are always coming up, hot topic throughout the entire exam. If management used estimates in the financial statements, maybe they're estimating the possibility the amount that they'll have to pay out in a lawsuit. If management use these estimates, information may become available subsequent to the period end, which could affect the estimated amounts. Lastly, we want to review the minutes from the board of directors after the period end. Anything in these board of directors minutes could alert the auditor to significant subsequent events. If they're talking about a merger or acquisition that's going on, yeah, you can find out about that because the board of directors is talking about it. Hey there! Are you ready to not only pass your CPA exams, but truly understand and enjoy the material while studying? I know it seems impossible, right? Especially to enjoy the material? We'll do it together. Tap into the power of CPA.examprep.ai, where we've got personalized quizzes, multiple choice questions, memorization guides, flashcards, simulations, all tailored to your learning. Our adaptive study planning puts you on the fastest path to success and lifts you back up if you fall behind. Avoid wasting your precious time and money attempting an exam with a low chance of passing, because who wants that? We want to get you through this process as quick as possible. Our exam readiness prediction lets you walk in with confidence, knowing that you're prepared for success on exam day. Thankfully, there's no payment method needed to get started, so why don't you come join us? Visit cpa.examprep.ai and let's achieve your exam success together.